Hi everybody, Thomas here at Rebel Income. For a lot of people, saving for retirement and building wealth through investments are an out of sight, out of mind kind of thing. They put money into their 401ks at work, and they may even direct a portion of their savings to investment accounts. But they generally don't want to take the time or effort to deal with those investments themselves. Now, the financial industry knows this about people, and in fact, they encourage it. Catering to that mindset has brought trillions of dollars in wealth to passive investing instruments, including mutual funds like index and target date funds, and it encourages average people to set it and forget it when it comes to their investments. For those who might be a little more ambitious, the next most common solution is the investment advisor. An investment advisor might not change the investment mix you're using. In fact, many of them regularly recommend the same types of index and target date funds you've likely seen in your 401k. What they will do is sit down with you and go over your investing goals, your time horizon, and talk about what kinds of risk you're comfortable with, and then make their own recommendations about the financial options you should consider. Before I continue, I should add that many financial advisors and financial planners, especially those with formal certifications verifying their expertise, offer a lot more than just investment recommendations and solutions. A good financial planner can help you organize your finances from current budgeting to investments and insurance needs, all the way to retirement and estate planning. In this video, I'm focusing on the investment side of the services they offer, because while I think there is value to be had for what a good financial planner will do for many areas of your financial life, I also believe that the investment side is where these advisors fall short of the mark. I'm going to outline 3 reasons I don't think these advisory services are truly serving the best interests of their clients. I'll also talk about what you can do by yourself to make up the difference. Before we dive in, I'd like to ask you to help me grow my channel by liking this video and subscribing to my channel so you can get notified every time I publish new content. I also have my Rebel Income Patreon page. I publish daily exclusive access content on this page, from stock reports detailing my analysis and search for the trades I publish for my trade alerts, to lists of underpriced dividend-paying stocks, and even weekly recordings discussing current open trading positions as well as current market conditions. You'll find the link in the description area of this video. Take a look. You can sign up for a free 7-day trial of any of my patron levels. I know you'll find something you'll be able to use in your own trades. Early in my financial career, I witnessed the first problem with investment advisors firsthand. I had left my position working with one of the largest mutual fund and brokerage houses in the country, being led to believe I could expand my experience by taking a holistic, comprehensive view of a client's financial situation and helping them create their own customized plan. That bubble burst quickly as I was actively discouraged from talking about any financial vehicle or solution that didn't fall under the umbrella of the company that recruited me. It didn't matter what my clients told me, or whether I was aware of alternatives that suited their needs and situation better. It's a primary reason I chose to leave that side of the financial industry behind. Investment advisors and financial planners are often grouped into the same category, even though in many ways it isn't a given they will all offer the same thing. That's because titles like financial advisor and financial planner can be misleading. In many cases, these are really just fancy-sounding replacements for salesperson, because there is no requirement that someone claiming the title of financial planner actually holds a financial planning certification. As my own experience demonstrated, advisors are often limited by the firm that employs them. A financial planner employed by an insurance company, for example, is going to sell you insurance, but will be unlikely to be able to talk much about any other type of financial product. A financial advisor at a large brokerage house can likely talk to you about a lot of different investments and investment services, but won't have much to say about insurance or estate planning. Even an advisor with a large investment advisor firm will often be constrained by financial products that have been pre-selected by that firm's investment committee, and discouraged, as I was, from discussing anything but those pre-selected investment products and services. What about certified financial planners and financial advisors? These professionals have industry certifications confirming their expertise, which lends weight to their credibility. In many cases, though, even these advisors don't do much more than ask their clients a standard set of questions and input your responses into a predetermined template so the computer can spit out your customized financial plan in 5 minutes or less. It really begs the question of how customized what they're doing really is. For the time that they spend with you and the services they can provide, advisors can charge a variety of fees. You do need to be aware of the different kinds of fees you may deal with. One of the first questions you should ask if you're considering using an investment advisor is whether their compensation is fee-based or fee-only. A fee-based structure will usually include commissions on product sales, along with advisory fees for the time they spend assessing your needs and recommending a solution. If your financial advisor can't or won't give you a straight answer about whether their compensation is fee-based or fee-only, you should walk away immediately. A fee-only structure is generally more straightforward and less likely to encounter a conflict since the advisor doesn't earn commissions from sales and therefore has no incentive to offer something that isn't in your best interest. Even so, fees can be one or a combination of 3 different types of the fees that are shown here, which can also be quite high depending on the size of your account. Some advisory fees may also be performance-based, subject only to whether your portfolio increased in value, but it isn't a given that any of the fees listed here fall under that category. In many cases, you'll find that the advisory fees they charge apply no matter what your investment results may be in any given year. Be sure to ask any financial advisor you're considering about their fee structure in detail, including whether any portion of their fees are performance-based. The final reason I think most people are better off without an investment advisor boils down to one simple but critical truth. Nobody cares about your money as much as you. When you talk to a financial planner or investment advisor, they may throw the word fiduciary at you and tell you that because they act as a fiduciary, they carry a different legal obligation than a non-fiduciary investment advisor or financial planner. Now that's actually a true statement, as a fiduciary is bound by federal regulation to act in their client's best interest, while a non-fiduciary really only has to make recommendations that are generally suitable for their clients in the broadest sense of the word. The distinction does matter, and it is true that a 100% fiduciary advisor will give you a higher level of service, care, and attention than any other advisor. Even so, the simple truth is that your money is not theirs, and no level of legal requirement will make them care as much about your money as they do their own. That's not a criticism, that's just reality. That's why I hold firm to the notion that the only person that truly cares as much about your money as yourself is yourself. If investment advisors and financial planners aren't the answer, what is? I think the answer is really simple. Each of us should be responsible for and in control of our own financial education and future. Now, I have a lot of friends that have heard me sing this song, and they tell me, I don't have the time to spend to learn about the stock market the way you have, or I'm just not interested enough to want to do differently than I am. That's fine, and if you're comfortable trusting your financial future to somebody else and paying the higher fees associated with financial advisors, if you use them, then I wish you all the best. If, however, any part of the picture I've painted makes sense to you, then you'll be happy to know that it isn't as hard as the financial industry makes it sound to educate yourself and take control of your investments on your own. It doesn't even have to take up a ton of your life. A good first step is to start learning how the markets work and how you can find investments that suit your investing goals and needs no matter what direction the market is moving. My Rebel Income Live membership, for example, is a great way to start that learning process. Sign up for a free, no-obligation 7-day trial, and I'll give you immediate access to my Getting Started with Rebel Income home study video collection. It's a video series that outlines everything you need to know about investing in the stock market, from reading a stock chart to understanding fundamental data, to identifying strategies that will keep your money working for you no matter what direction the market is moving. You'll also get access to every service I offer, including my reports, my income generating trade alerts, and live participation in my weekly trading webinar, where you can ask me and other members questions and benefit from a mastermind-driven group learning experience that will help you create your own investing plan, uniquely customized to you by the person that knows you best. Click on my Patreon page in the description area of this video to get started. What do you think about investment advisors and financial planners? Have you had a good experience, or did it leave you wondering what you paid for? Leave your comments below and let's get a fun discussion going. If you like my content, go ahead and give me a like on this video and subscribe to my channel. Your engagement will help my channel grow so I can keep giving you terrific new content here. Thanks again for your time. Happy investing.